I've been asked to talk about venture capital in South Africa, and one of the things that is making it so exciting at the moment is that the world is changing so fast. And new technologies and the interaction between these technologies, literally every other week, there's something new and cool and interesting, and what seemed impossible is happening. So one of the many things we've done is established a BioTech fund, and when you meet the BioTech team, they explain to you that back in the day, which was not so long ago, it cost hundreds of millions of dollars to sequence the first genome. Today you can do it for less than $1,000. And they say that in about 5 years' time, it should be cheaper than a cup of coffee. So if you can imagine how that is changing the way people think about things. If you think about computing power, all of you here are experts on Moore's law, right? All of you? Who wants to explain it? Anybody? Moore's law. Wow. Is this a VC conference? So Moore's law basically says that you can double the speed, more or less, of the number of calculations or whatever else you're doing with computers about every 18 months. And we're about to get into the quantum phase. IBM has just completed a test where what would have taken about 10,000 hours with the current computing power, they've done with a prototype in 3 minutes. So that's a different change. Then the Internet of Things and the number of satellites and how much information we have available and the ability to analyze that data and use machine learning and artificial intelligence. All of that is literally changing the way the world works. And our hope and desire, like Vusi's, is to make sure that smart entrepreneurs are seizing upon how the world is changing and using these new tools and techniques and possibilities to make the world a better place. And so VC for me is really about the future, it's about innovation, it's about economic advancement, it's about solving what seems to be intractable problems, it's about quickening the pace. What should have taken 15 years to solve should now take 6 months to solve. And if we can begin to harness these new technologies with that mindset, I think we can go a long way. So what's preventing us from doing that in South Africa? I was introduced as somebody that was going to talk about Africa. I'm going to be talking about South Africa exclusively because our fund is a South Africa only fund. So our biggest problem, one of our biggest problems, not enough capital. And if I compare one simple statistic, last year, twice the money that we spent on VC was spent in Kenya. Kenya is 1/5 the size of South Africa's economy. So if I compare it to Israel, which is a little bit unfair, we did $100 million, and they did $6 billion. 1/10 our size, 60 times the size of our investment. So if you were doing some bullshit calculation, I mean, you'll say they were 600 times. Okay? And in the US, they invest in VC by 11 o'clock each day, including public holidays and Sundays, what we invest in a year. Every day by 11 a.m. they've done the same number. $100 million is done by 11. Okay. So it means we need to get more capital. We've got too few experienced venture capital funds in South Africa. Kiet and Lou and a few other people that are here have been pointed out as venture capital fund managers, and we've been pointing at the same people now for many years. And we just don't have enough. And you need a much more competitive and diverse and more specialized venture capital fund infrastructure if you're going to grow in VC. The risk-taking, I can tell you now that we're trying to raise a new fund, and VC, everyone's like, no, thank you. Private equity, yes, you can have a very big check. Because venture capital is sometimes a business that still doesn't have revenue. Sometimes it's a business that's got a tiny bit of revenue. Almost always, it's a business that doesn't have a profit. Right? But so that stuff, the typical investment people in institutions that we talk to don't get it. The high cost of failure. I was in Israel 3 months ago, And the guy explained to me that every year they have about 6,000 new startups in the country, but they also have about the same number shutting down, failing. And once a month, they have a party to celebrate those that have failed, because they know now they're ready for success. And that's it's a mindset we don't have in South Africa. Like if I had failed in a business, then you sort of hide away and nobody wants to see you and nobody wants to trust you again with their money, and it's exactly the opposite in the most successful VC nations. While I said there's not enough money, on the other hand, the quality of the pipeline in South Africa is pretty bad. So we have 169 incubators stroke accelerators. 169. 58 of them are funded by one government institution. And I can tell you for a fact that less than 10% of that number, so what's 10% of 169? Round numbers, 17. Less than 17 businesses have come out of those incubators and accelerators in the last 10 years that were able to raise 10 million rand of third-party capital. Okay, that's a different way of saying our accelerators and incubators in the main are pretty useless. And then a research and development conversion problem. There's a government report published very recently which shows that over 2009 to 2015 or 16, we spent 42 billion rands doing research at universities. The number of startups, not successful ones, I'm saying the number of startups created by the universities in that same period was 40. So if I said to Vusi, I'm going to give you an opportunity to do a startup, here's R1 billion. It's a no-brainer, right? But our conversion from research into commercialization in South Africa is very, very bad. We're up there with our peers on the quality of our research, the number of journal articles, the number of patents we register. We can hold our heads up high. But on that conversion piece, it's really, really bad. Okay, and the fractured ecosystem, everybody knows. And one of the reasons we are all here today is we're trying to reduce that fracture and try and become more cohesive. And the point Vusi was making earlier about let's not compete, let's collaborate, because we're too small and weak and disorganized. And if we're going to be competing at that stage, actually there'll be very few winners. This is just giving you the numbers behind the point I was making earlier, that we are relatively small. Our R&D conversion rates are really, really bad. And I told you why I felt our ecosystem had far too many weaknesses from the demand side and the supply side. So I'm not going to spend any more time on this. You got the basic story. What's happening is, what we've seen over the last 20 years in South Africa is private equity gets all the money, venture capital gets very little of the money. So in private equity terms, we are better than our peers. As a percentage of GDP invested in private equity, we are better than our peers, which means we are really good at that stuff. But it doesn't convert into venture capital. So if you look at the number of deals we've done in venture capital or the total amount of capital we've deployed, it's a tiny fraction. It doesn't even add up to half the biggest private equity fund in South Africa. Our total VC spend is less than half the biggest private equity fund in South Africa. We have 25 funds in private equity that are north of 1.5 billion rands of capital under management. So it's a huge issue. But there's two things that I just want to say for the private equity industry, if they are here. One is a significant portion of the private equity money is replacement capital. A lot of it is the famous BEE deals. I like to call it the magic trick. You take white money, you give it to a black manager, they buy 40% of a white company, that guy buys the second holiday house, and the company is empowered. Have you seen that magic trick? Yeah. And it's just not helping. And I can tell you that Vusi is worried about startups being sold to other fund managers. That's the main activity in private equity. Secondary sales. There are some deals that have gone around the industry and are probably in their fifth private equity deal, fund today, same company, because they are so easy to gear up and, unwind again over time. So the private equity stuff, just to put my hand up and take ownership, I spent 9 years working in private equity, so I'm as guilty, but at least I've changed now. And so VC is not as attractive. It's not recognized as an asset class. People can't get their heads around, how we're going to do this thing in a slightly different way. What we've studied very carefully what the successful VC nations have done. So we've looked at Brazil and South Korea and Taiwan and Israel and the US and a whole bunch of others. And basically, all of them have the same lessons. You've got to get more money into VC. So even if it's going to be badly invested initially, people will learn, and then they'll become better at it. And if you're not willing to, allow for that failure and allow for some losses, you can't mature the system. So you almost have to accept that it's going to be a bit of downside, a bit of loss making, but hopefully we have enough successes to give people hope to continue. In every one of those cases, including the famous Silicon Valley, where they love to say that it's all the private sector. Actually, government. Without government, most private sort of venture capital funds today would not be where they are. And the easiest story to tell in that context is Israel, because it's such a huge, roaring success today. But back in the day, 20 years ago, government took $100 million, and they said, okay, we're going to give it to 10 funds. We're going to give you $8 million each if you come with $12 million from your side. And secondly, when we exit, we don't want more than our capital back. So the guys coming with the 12 million can get more of the upside in exchange for us subsidizing some of the downside. And that led to a situation today where there are probably more than 200 venture capital funds in Israel. That Yozma program, when it started with $100 million, created 10 venture capital funds. Now, if we did that in South Africa, we've got 10 or so already, and if we double that up, we'll begin to create the momentum for the takeoff. The demand side, as I've already lamented, so I don't want to lament too much, is that the quality of the deal flow and the stuff coming out of our incubators and accelerators just not up to scratch, and we need to become much smarter about how we source deals, how we accelerate businesses, and how we help people become more successful. And clearly we need more private sector participation. It's very hard. The average salary in a private equity fund is about 4.5 times the average salary in a venture capital fund. So even somebody as smart as Kiet, sorry to pick on you, Kiet, okay, is deeply underpaid relative to his peer, doing less sophisticated stuff in private equity. So clearly it's not a well-rewarded thing, but we need to get more people to make that transition, and then hopefully the carry will compensate for the low salary. Hopefully. So I've come to that point in the talk where it's a marketing and PR moment. Is everybody okay with that? Okay. So we got lucky. A couple of years ago, we were facing a ratings downgrade. Government gets together with the private sector and says, let's do something. So one of the ideas from the private sector was, okay, let's set up this fund. For each rand we put, government puts a rand, and we'll have a couple of billion, and we'll go and build SMEs and do some creation of new businesses. And then the private sector put together with the PIC, put together the 1.4 billion. And at that point, government said, by the way, we don't have any money. So we ended up with a 1.4 billion fund instead of a 2.8 billion fund. And I joined the fund 14 months ago, and we decided that one of the key things we want to try and achieve with half the money is venture capital. The other half is going into slightly more growth-oriented existing businesses, providing debt for fast-growing small businesses. So it's a different categorization and slightly less risky, so hopefully we can make a slightly better return. But what we've done in a very short time is we've allocated money to 2 existing venture capital funds, Knife and 4DI, who have a reasonable track record. We would have given a lot more money to Knife than we did, but they had a 12J structure which limits what the biggest investor can put in. Then we did something which is really required in South Africa, which is we've created 4 first-time venture capital funds. So Savant Venture Fund is a hardware fund. They work with inventors. The first deal they've done is a medical device, and they'll be doing many more. The second one we did was One Bio, and that's a biotech-focused fund. And we are about to get more money from 2 other LPs. It will be a 200 million rand fund. South Africa, because of a whole bunch of historical and scientific reasons, has a competitive advantage in the biotech space. We're really good at what we do. We've got the flora and the fauna, and we've got a whole bunch of other things that go for us, which makes us better than our peers in that space. So we want to, there used to be a biotech fund 20 years ago. It didn't raise a second fund. So this is now the first biotech fund in South Africa. We've also created the University Technology Fund. I gave you the data point earlier about us not converting our research into businesses. And so we've launched the University Technology Fund. We're working closely with the major universities, some of whom are co-investing in their deals. And we are trying to commercialize the very smart ideas produced by the professors at these various universities. And I can tell you from having looked at the pipeline that that's going to be a very successful fund. A huge number of opportunities for us and very smart professors who just don't want to be in business. They just want to carry on doing research. So if we can get entrepreneurs, professors, and capital into the same room, I think there's quite a lot of magic to be created. And then the smallest deal we've done, but of which I am the proudest. What was your thing, Vusi, about not big and best and whatever? Okay, this one is the smallest, but I'm the proudest of it, because the one thing that people in South Africa in the venture capital space know, that there aren't many black managed venture capital funds. So DAV is one of the first black African woman managed venture capital funds in South Africa. And if Nonku and Thandeka are in the room, are they in the room? Yeah, come here. Come here. I've got 2 minutes left. I've got 2 minutes left, and instead of boring you with more words, you might as well look at these 2 amazing people, because they are going to change the way venture capital is done in South Africa. And the diversity that's needed in the industry is really, really important, because they will see stuff and meet people because of who they are and their networks that many of the traditional VC guys are just not going to see. So can all of you make sure that they succeed? Hands up. Yeah. Thank you. And we are doing, if you add up that amount and the last deal that's in the pipeline that goes to our investment committee in December, we would have allocated 655 million rands to 7 venture capital funds. It makes us one of the largest institutional investors in venture capital. Now you can look at that 2 ways. You can either say Ketso is showing off, or look at it the way I look at it. That's how small our industry is. It's really, really, I mean, it's unbelievable that $50 million makes you the biggest one of the biggest institutional investors in venture capital. So clearly we have a long, long, long way to go. And the last PR note is that we have completed this fund. It's almost fully committed. We have started raising a new fund of funds focused exclusively on venture capital. And we are doing 3 things that have never been done anywhere else in the world that I know. We are putting up a 50 million rand first loss into the fund, so to give some downside protection. 2, we are taking a 0 fee. You heard that clearly. No fee, no carry. Okay? Because we think somebody needs to do that if we're going to get the VC industry going in South Africa, and we've put up our hands to do that. I have 13 seconds left. Thank you very much.